Pretty good. How are you?
Good. Good to be here with you. Excited for this. Yeah, you're not only an artist, a chartist, and an analyst, right? I also love the rational route because your approach, you're like, listen, this is what we've seen play out before. I don't know that it's going to continue to happen. You have a very rational, balanced approach to all of this. I like that a lot.
What I do or so, or who I am. I don't know if I should discuss any of that or if I just should, or we just go into the charts or what.
See, a lot of all right, a lot of people, well, they're looking for a little bit of background, a little bit of history.
Yeah.
I'm more interested in what you're presenting rather than who you are on paper or anything like that.
Yeah.
Right?
All right. We keep it like that. I like that also. So.
Yeah. As far as I'm concerned, you're the root, and you're sending out signal. Helping the high line Bitcoin community make sure that it's laser focused. So that's what I want to know about.
Okay. Yep. Sure. So yeah. So I took I tried to define like what is a bull and a bear market mathematically, and I came like my definition was kind of like 100% recovery of the previous all-time high and a 70% drop of a crash after a new all-time high that we would go into a bear. And I did that because I actually initially I wanted I wanted to split obviously the price data of Bitcoin into a programmable function, let's say. So I wanted to do it programmatically, I just didn't want to handpick it. I wanted to come up with a mathematical definition. I think that is in general like a good idea, to look at things that way, because they tend to make more sense. So I came up with that definition even before I made this chart, and I did it mainly because I was interested in finding, when we would, be near the top, of a cycle. I was interested in finding, because I'm not a day trader. I like to look at long-term trends. So I'm kind of interested in trading at a 2-year time frame. So I want to take some profits at the cycle top, and I want to buy back in at the bear's bottom. And so that is good enough for me. And for the rest, I kind of hodl, just through, and I keep on even stacking a bit, in bear markets. And I did also in the current dip because I was not expecting it, but it was such a big drop that I had to take advantage of that. So I added a bit more also in this time, which initially I was not planning on. But I did I first. I built a platform basically for myself to analyze, because I was very interested in to see if I could find interesting data to define a cycle top. And so I started with a mathematical definition of what bull and bear markets are, and I used that because I was interested in trading those bull and bear markets. So I did not think that much yet of the halving at that point, although I'm very familiar with the halving, and but this made more sense for trading. So I put that mathematical definition like that, and first, I actually started backtesting certain strategies on historic data. And so then I started do more charts. And when aligning this chart, when I found that the all-time highs really aligned well, I was quite amazed by it. And I already had made this chart even before the 2021 line was like even in the chart, right? So the cycle didn't even start. We were still in the bear market according to my definition. But when we got to this, so I've been tracking this chart, instead of, I've seen also the halving versions of this chart. But I indeed didn't like him as much because, the tops were not aligned. And so I think my chart had, a better granularity. And so I like my chart better. And so far it seemed we were really tracking this price data like really well of the previous cycles. So that's also when I tweeted it out, when we, because I was waiting for that dip, to happen, and it didn't happen right away. Like it took a little longer than I expected. And so yeah, exactly at that point. So I was waiting for those days. I was waiting for the dip, but it didn't come. And then I thought like, okay, maybe like this cycle will be different. But once it started dropping, then I thought like, oh, this is really scary close. Like how this trend is following the previous cycle. So I tweeted it out, and indeed it went quite viral. I suppose because of you as well, and Plan B and Adam Back and Preston Fish and all those, they started, retweeting it and responding to it, and they liked it. So it was, I got a lot of new followers that day, and it was a nice day, to get the response from the Bitcoin community, because I've been wanting to add also something to the Bitcoin community for a long time, besides hodling, which I personally think, is the best thing one can do for the Bitcoin community. But it's nice to do something in Bitcoin, and yeah, I'm glad to help, with these kinds of charts. So.
Yeah, what a good introduction, first of all. And it's really interesting that you're coming and you're approaching this from really a different perspective than most people that I know. You're starting this off trying to define when you believe a bull market begins and then when it ends. And you're using the new all-time high as the beginning marker where you're lining everything up. Like you said, before all this played out, even to the dip, you had already these two cycles lined up from the all-time high. You were waiting. And then as it played out, and then as it dipped, you're like, okay, here I am. Right now, a couple of things that you mentioned, that you define a bear market beginning after Bitcoin has had a 70% drawdown, which for me, also is also one of those situational awareness points that indeed, in fact, it is occurring. Now, I don't know if it's because you saw the 70% drawdown over here during this, like what we call the first wave of the 2012 cycle, or it's because in the actual bear market from cycle peaks until the bear market becomes, it's confirmed after that 70% drawdown. A lot of people listening to this are also hearing you say, well, I want to take some profits at that cycle peak, right? And also, towards that cycle bottom, I want to make sure that I'm accumulating. And then other people might be getting confused, and they're thinking, well, 70% off the all-time high, that's too much for me to realize we're in a bear market, right? So could you clarify a little bit for us?
Yeah. So indeed, I backtested this on Bitcoin's historic price data. So indeed, the 2013 market, you've seen this chart. In the beginning, it has this steep, this peak, and basically this blow off top, and that's a 69% drawdown. I use daily price data, so it might have been more, on if you look at hourly data or so. But and so when backtesting, I've been trying, all these kinds of definitions, but the best definition which worked best for me was, to align these cycles, was to use the 70% drop as an indication of a bear market, because if you do a lower percentage, then that would suddenly include then this first peak of the 2013 cycle suddenly becomes a cycle of its own, and that I didn't want, because I knew it was not. So I had to keep searching for better values, and I know 70% drawdown is a lot before you start trading, but for me, I mean, since I'm kind of trading on a 2-year time frame, so I want to indicate the best weeks around the cycle top and the best weeks around the bear bottom. So this 70% drawdown for me was totally fine, because if we have a 70% drawdown, it's likely that we even make an 80 or 85% drawdown as well. So Yeah, I think that's how it worked for me.
And interestingly enough, just in conversation with friends, people are the current price action is definitely throwing a certain group of people off, questioning whether or not, we are indeed mid-cycle, or if the top is already in. And they're saying, well, Jordan, for you, what would it mean that we've entered a bear market? And so right away in my head, I also instinctively said, well, 70% from 64,500, 19,500. That's also the break of the all-time high. We trade below that, and I have to say, well, we're no longer in a bull market, right? So in other words, for you, if that were to happen, you would be exiting right where you entered, right? More or less right at the same price, $20,000. You would just get on the side. Would you then wait for price to make a new all-time high above $64,000? Whatever it might be?
Yeah, I would probably wait. I mean, it could, like, if price really starts significantly dropping more, and I mean, if it does more than a 70% drop now, yeah, I would believe that cycles are really changing, or that, behavior is changing. But I don't expect it to happen. I do have to say we dropped further than I initially expected. I was actually ready for a drawdown to 38K, and I actually thought it was more likely to stay around 43 or so. And this was based on like some charts that showed that like volatility seemed to be decreasing. And so also, if you look at 2017, like we had only like 35% dips. So
with the exception of this was a 40% right over here.
Yeah, I think on a daily chart it was less, but I'm not sure. I would yeah. I have a volatility chart. It should show it on there as well. So I was expecting, like, since I saw some nice charts about like decreasing volatility, I initially expected like, okay, maybe the drawdowns will be less severe. It made also sense in a way, if you think of that, if the market is growing, if there's more participants, that volatility will be reducing. Like, because it has always been said in the Bitcoin community, kind of like, once we're around prices of $1 million, volatility will not be the same as the early days of Bitcoin. And so for that reason, I also started already believing that, okay, maybe we will have less volatility also during this bull market. But after the drawdown we had, I had to change my mind on that. And in a way, I mean, it does make sense if you look at the cycle strength, because, since we are, going up faster, we might also go down faster, or more, like, because, the 2021 cycle is in between in 2013 and 2017. So, it makes sense that we also have a volatility that's in between the two cycles. And so I'm actually looking lately a lot at these kind of similarities, because we're truly quite in between these two cycles. So it also makes sense that many things we do are, like, in terms of values, are in between these two cycles. And for the drawdown, that would be in between, like let's call it a 40% drop in 2017 then, and a 69% drop, and yeah, we did like a 48% drop or so.
Right in between. Yeah. Hindsight is really helpful, and it's so fun. But 38,000 was the exact level that I also thought would be the max of the dip. Because I saw the volatility much less on the downside. Now people say the volatility was actually increased to the upside than the previous cycle. We were outperforming it on the upside, but to the downside, we were seeing less volatility to the downside until this happened, right? Yeah. And now in hindsight, it's able to say, well, okay, that makes sense. Not only was the volatility greater to the upside, it's now greater to the downside. And also, when I look at and I want to ask you your opinion on this, your insight, because when we're looking at how far price consolidated during the 2013, right? And then you look at 2017, we seem to be in between the two. So it's not only volatility to the upside and downside, but the consolidation seems to be also some type of average of the two. Are you seeing that as well? Or
Yeah. So if you take that other chart that you just showed, so this one, yeah. So here I put the number of days of the consolidation, and I found in 2017 we kind of have this hump on the end, like you see, like, so when we end day 55, let's say, of that consolidation there, then we get this hump, like above the blue line that I put there. But I think that was also maybe kind of like, maybe there was a catalyst for that, hump to happen. Like maybe the consolidation there ended a bit early, because if you look at this, let's say this blue trend line that's there, it is, it's really quite above it. And so I think like that that in 2021 we will keep more track of this, like the blue line that I drew there. Like obviously this was earlier. I actually initially I expected this dip that we made that's shown in this chart was maybe the final dip, but we went a lot lower still now. So obviously those lines change. But in terms of consolidation, yeah, I think we probably will again be in between the 2017 and 2013 13 cycle. But we have to keep in mind that those 55 days of 2017 might be a bit short. Like if you take it all the way to the blue line, let's say there, then it would be like 70 days or so. So in between 70 days and like 170 days, so maybe like, I don't know, actually, I haven't tracked now how many days we are until now, but we still have some way to go, and I think we will, because I think actually that this consolidation will it will not rise as fast as we did in 2017, because as I said, I think this hump was, maybe there was some catalyst for it. I haven't looked for the news around those days, but I expect more a similar, slow, because there was really some capitulation, in this drawdown, and I think people were like hurt mentally, and I think it will take some time to recover and to make all the bears bulls again. So therefore I think we will have a more similar, like slow rising price in the next months, but yeah, we will have to see. Of course, any catalyst, if there's a new bullish catalyst or so, like things can change. So we'll have to see.
Right. Now, when we look at these past cycles, you have over here 2017, 2013, they're both 289, approximately 280 days past the new all-time high. Do you foresee that playing out again? Or do you think, because as we mentioned, we thought this was actually the low, price started coming up, and then you had Elon's tweet, and then you had, some, whatever happened, price made a lower low. You're still tracking it from the new all-time high. So using that as the base and as the premise, do you still think that, or do you have any inclination about how many days from the new all-time high the cycle lasts, or do you judge it just by until you have a 70% drawdown?
No. So yeah, I did a recent tweet about that actually. I think like in the new all-time high would be more likely around the beginning of December. If you look at this cycle and let's assume that the low is in, now, then we so far took, for some reason, we took 28.5% longer than we did in previous cycles to reach this low after the previous all-time high. So if we take this 28% and we add it, to so this delay, basically we add it to the all-time high, like the initially predicted all-time high, then we get to the 6th of December. Now, if for some reason, this delay that we had was, I don't know, anything could have caused it, right? Like the market is bigger, like it could actually, there's something to say for lengthening cycles because of this, although it's I don't know how significant that would be, because it's only like 40 days or so that we're slower or in reaching the low. But if the cycle would take off now as fast as it did in previous cycles, then we would get a new all-time high around like day 331. So at the start of the blue line of the blue area there. Yeah. So that right about there. But if we would continue this like slower cycle, slightly slower, then it would make more sense to go to December. And in my opinion, like looking at previous cycles, because the tops were not in September, right? Because these cycles are scaled and aligned to the previous all-time high of the 2021 cycle.
This was December.
Yeah, so they were both December, or I think the end of November, maybe the 2013, it was like 30th of November or so. But let's say that was actually the beginning of December as well, and the other one was in I think 17th of December, I think, if I remember correctly. So that was the 2017 cycle. So December seems to be a good month to make a new all-time high. So maybe again we will have an early Christmas this year if history were to repeat, or like rhyme basically. So that was kind of like my because since we have to adjust for if we have new data, we need to adjust, obviously, because I think the September all-time high would be a bit too soon, also given the significance of this drawdown. I think since I expect like this consolidation to take longer, I also expect that the new all-time high will come later.
Interesting. Very, very interesting. Just let me briefly explain what we're doing over here. We are lining them up. If this indeed just put in the low, we're trying to line these up by the mid-cycle dip now at this point. Okay. Mm-hmm. And then you could see, the 35 days, prior on all three of these cycles, how coming into that mid-cycle dip, all the peaks and all the troughs are almost perfectly in line. If you take it back even further and you're looking at 2020 cycle over here in red, and you're seeing the top of the peak, the bottom of the trough, the top of the peak. I mean, you can't deny the symmetry that's occurring. And then in the 2016 cycle, right, it's also the same, the peak to the trough, until you get closer, then they start lining up almost all perfectly. Now, going forward, if you line them all up, because again, just similar to you, I projected this to be the dip, right? And then not only did we put the low in a little after, now we've put in a lower low, right? So we're just kind of realigning, trying to make sure that we're in step over here. And then going forward, lining them all up, well, you could see these two cycles, the previous two, well, they peak approximately 150 days later. You have it broken down further where you see like this one wave and then this two wave. These are 60 days apart in both cycles. And then from this last little drawdown, it's 35 days to the peak. Do you foresee anything like that, or the possibility of anything like that playing out? Is it? I think your blue line starts when we put up your blue line. Let me make sure I pull it up. This is starting then around the date we have. Let's just call it October the 19th, whatever it is. October the 19th, right? What are your thoughts in just seeing that for the first time, and how I understand your research is different. It's more analytical, coming off of using defining what the bull market is off the previous all-time high. And what do you think?
Yeah. So can you pull up the other chart still? This one. So did you adjust the cycles for the price data from the bottom, the dip here, or did you use still the previous all-time high as to define the other cycles, to scale the other cycles?
These are all scaling from the dip. These are scaling from the dip over here. And you could see over here, just briefly, this is actually scaling them up using not only the previous all-time high, and then overlaying, you can see over here, like the prior all-time high. And then you have one scaling it from the halving, and then another scaling it from the bottom of the dip, kind of gives a medium projection. Right? I know it's not your work, but I would love your insight. Yeah.
No, because I was doubting just if you had shifted only the cycles to align the dips, but not like, to just to make sure that you scale them correctly from the dip and not from like the previous all-time high, and then start shifting, the cycle a bit to the left or to the right, because then you get obviously like not a correct view. But if this is scaled from the dip, I think it makes sense. I mean, I've been doubting to also, align again from the dip onwards and to see where that would go. I didn't get to do it yet, but my reasoning kind of is that the halving initiates this supply shock, and this takes some time for the market to figure out, right? Like there is this supply shock, but once we reach this previous all-time high, like Bitcoin comes in the news and people start getting aware, like, hey, we're suddenly again at this all-time high. What's happening? Like, so for me, the previous all-time high therefore is a very good like starting point, because it is, it's like a dominoes effect, right? Like, so I've posted also a tweet about this, like, so the halving initiates the supply shock, then we get this previous all-time high, and suddenly people start becoming aware, and that's why we start the bull, like forward. And so since we have this human psychology basically, in this cycles, like, it does make a lot of sense to again say like, okay, we have this dip because we knew it was coming. We didn't maybe know how far it was going to drop, but we knew it was going to come mid-cycle, right? So it makes sense that we align these dips. But I think it is still a little early to call like the dip, that like we're not sure yet if we had the low, although I do believe we have, but I think it's more likely that we have, but I've been surprised already before, so we have to wait a little longer to get some confirmation, like to be sure that this was the low. But I do think it makes a lot of sense to make this, to align the cycles like this, because that's again like the next step, the next domino basically that falls. And so it makes sense to keep track of these cycles. Though we do have to keep in mind, that the shift in time. And as I said, that's why I like to keep the view at the previous all-time high, because you saw the 28%, that we're taking longer. So you have to keep in mind that we might also move slower into the next phase. So that could change things a little.
Yeah. Well, I laugh and I smile because, you're not familiar at all with any of my work, but your last little bit of rant there is basically verbatim saying the way that I describe what's going on. I mean, everyone is going to be smiling. It's verbatim the way that I describe it. And, again, starting with the halving event being the supply shock that sets off, the bull market. Once the new all-time high is made, we then have that reference, and that seems to be the more accurate measure going forward. Now, and I still don't know, and none of us know. And we have, Ian struggling with, do we continue using the new all-time high, or do we go ahead and start lining them off for the dip? And that's why we start tracking them all together, because we don't know which one it's going to be, trying to just get that bit of a range to see how this all plays out. This is new, never even considered this. And this is fantastic for us to now have our eye on. And then I'm thinking, because you can't deny the symmetry that's taking place between these past cycles, as you line up from the dip and then go backwards, right? So we're wondering, well, once it's confirmed that the mid-cycles dip in, to help us because my objective is to exit at the cycle peak. Going even further, Root, you see if this is all playing out and we go into a parabolic blow off top, in the prior cycles, you also saw this price action of one down, two up, three down, shorter than two. And then that's the exit on the blow off top. I want to exit the cycle peak, right? And then wait out the bear market using those markers of that 70% drawdown, confirmation I'm in a bear market, waiting for that 85% drawdown, waiting for that capitulation event, and then accumulating back in. And if not, and if this isn't playing out, or we are seeing a lengthening cycle beyond what you're talking about over here, and all, well, then obviously I'm a hodler, right? And I'm going to be slowly accumulating further. But if we could use these 4-year cycles to our advantage to accumulate more, that's that. So I'm trying to adapt to the market and what the market's doing. And if the market is showing me that after the new all-time high, keep tracking that until the dip comes in, right? And then start tracking off that further. Well, that would just be an edge to get to here.
Mm-hmm. Yeah. To add to that, so the halvings are every 210,000 blocks. They're not exactly 4 years, so that might also cause a slight shift in the cycles. And so each halving ended up a bit at a different month. So I think even the months of the year influence of course human behavior as well.
People often refer to the golden ratio. It was when you look at the bear market low until the halving, and they take how many days that took, and then approximately less 2%, you're looking at the duration of the bull market. And that's why that's worked out in past cycles. If all of a sudden this cycle, we peak beyond September, the 20th, or the 17th, or whatever it might be, this golden ratio is broken. What do you think of that?
Yeah, so I think with this chart, that shows that the golden ratio might be broken. If we continue this slower cycle slightly, the problem with the golden ratio obviously is also that just n is 2. So it's just two previous cycles that align in that way, but that's not a huge guarantee, obviously, to for the third cycle to have the same result there. So I think it does. I mean, that does not make it still makes it worth looking at it, right? But I would like to have more confluence of other indicators that it would be interesting to if we look at the golden ratio to see do on-chain indicators also indicate a peak, what is going on, because if they do and it aligns with the golden ratio, then sure, then the golden ratio might add to the confidence of hey, we're at the top here. But this chart, now, since it seems that we're slowing a little, I actually doubt that we might make the golden ratio that it might come through this cycle too.
Now, what would happen per se? I mean, I agree with you wholeheartedly. If by day 231, all of a sudden price was back up here and actually laid up as it was in the previous two cycles, then we would be consulting that possibly the original target of approximately 280 days from the past all-time high, including, like you noted, if on-chain analytics are also pointing to the same, that's going to, and then we see price, accelerating out of here, then we have to actually be looking for, the fact that, this cycle might be right on time.
Mm-hmm. It could be, it could be, maybe this dip was just coincidentally a little later and we will recover faster. I mean, that is a possibility for sure. But yeah, I would like to see confirmation first.
I want to look at your angles. I think this is incredible stuff. Before we do that, this is a chart showing days since bottom, past cycles, looking from the bottom to the peak, right? And, some people out there look at this as some type of indication that we're looking at lengthening cycles. They point to the first cycle here, being shorter than the second cycle, being shorter than the third cycle, right? They also pointed to this as possible diminishing returns. But I think we're going to discount the diminishing returns, being that already this cycle is, already outperforming. If this was diminishing returns, the purple cycle would be down here somewhere, most likely. Could this be indicating perhaps that we're looking at lengthening cycles? Or do you, obviously, if you're looking at a potential December, peak, or the option that it's on the table, it's viable, what do you think about lengthening cycles? And if cycles continue to lengthen, how does the halving then play a factor into all of this? Or does it no longer?
Yeah, I'm not a huge believer of lengthening cycles. I mean, again, here we only have had 3 cycles. So again, N is 3 for the amount of lengths, that we've had. And the fact that this cycle has shown more strength than previous cycles, makes me doubt that that it will be longer. Like it could be, but I'm not really counting on it. I've seen the log growth curve. I don't know if you've seen those kind of charts.
Yeah.
And that shows also a bit of like diminishing returns and lengthening cycles. But I mean, the fact that for months in a row now we have had a steeper price rise, I'm also doubting a bit more the log growth curve, and I believe like that we might go higher, like make higher returns as in 2017 this cycle, and that I mean it could go. The thing with like lengthening cycles and so the human behavior that comes back every cycle, it will. I mean it rhymes, right? It doesn't really exactly repeat the same, but all these consolidation phases, they are. There's certain news going on during those kind of phases, and like Elon now, like the tweet, and that we maybe dip deeper because of it.
Right.
Things like this have happened in the past as well. We had like in 2017 cycle, there was the whole SegWit debate, and that was pretty critical, as well. And so things, certain catalysts for either a bearish move or a bullish move, they come at certain different points in time in the cycle. So therefore, also some consolidation might take a little longer than others at certain moments in time. And so I don't know. Like in the end, like I think, and that's why it's so nice to look at the other chart I made, like the one about the bullish days. So I'll maybe go into this chart a bit later, but let's just look at the length of the cycles here. So although 2011 we cannot count as an exact length because it was actually longer, since we don't have price data from earlier price data, right? So it's better to look at the last three cycles, or the last two, so 2013 and 2017. And indeed, it is lengthening, but in that case, we're only looking at like NS2 or NS3 in terms of like length. So I'm not convinced, and I think again this cycle we might have between 52 and 71 bullish days. Like 50, it took, we had 52 days of exploring new highs in 2013, and we had 71 days in 2017. And since we're going at a pace, in between those two cycles, it makes sense to me that we will also have like maybe 60 days or so this cycle. It makes more sense. So in a way, like now, I don't know, because consolidation can take longer, and that's not counted in this chart, right? So all the consolidation and drawdowns, they're taking out of this chart. So here we're just looking at the days that we're exploring new highs, and that is between 52 and 71 days. And so I would expect like around 60 days would be a good target. And but could the cycle in total be a little longer? Yes, it could, because maybe because of things like Elon tweeting, and we have longer consolidation. It might take a month longer or 2 months longer to recover, and therefore the total cycle might be 2 months longer. And that it would just be because of this event. But we have other drawdowns that have other things going on, and so that's kind of my opinion about the lengthening cycle theory.
Well, I mean, and it's true. You said, what, we only have a couple of cycles to go off of, just like the Golding ratio. It's not enough to make any type of definitive decision. I love how you're talking about over here. We looked at in the first cycle, the 52 days of all-time highs. Interesting that it was a steeper incline than the 2016 cycle, the 2017 bull market over here, which had more days at all-time highs. The possibility exists that this one actually comes in somewhere between, and that's a really good situational awareness point for us to be watching and keeping track of. We talk about the possible longer consolidation that we're potentially going into right now, right? What's interesting to note, though, around 220 days over here, when the both 2012 and 2016 cycle, right here in 2017 bull run, were matched up to each other, and then you saw, obviously the 2013 well outperform. Is it possible? And as we've been outperforming the previous cycle in the middle of the two, if this consolidation winds up being prolonged, but winds up coming out of it as an average of the two, just like this dip was an average of the two, just like on the way up was an average of the two, and they're all three around this date kind of matched up together, well, then we might be projecting that, we expect, even though the consolidation was longer, not as long, this is very long in the 2013 bull market over here, but if it's still long, maybe that means, the longer the consolidation, the longer the expansion, or the higher the degree of the expansion. Something to watch out for. We just don't know. But one thing what happens in your mind if we really break the dynamic of the past cycles, align it up like this, and we start going sideways for a prolonged period of time, well under the other two, right? We could look at this one over here. If we start going into September, and we're still trading somewhere around $50,000, does that change your view of anything?
Not necessarily. I think in 2013, we relatively also went sideways for a long time, like if you maybe pull up the other chart once more. Yeah. So if we look at this chart, like you can see, we made the low in 2013, and then it went still, it took a long time before reaching the new all-time high. You could say that we went relatively sideways, or like not as steep for quite a long time, especially on the end there. That around that area, we went sideways for a long time. So, if we do something like that now around the dip, like that would still seem normal to me. Like we come from some very, FUD, like, about mining, about energy, I think since in the world there's so much advocacy for like green, everything is green and carbon footprints and all these things, like, there's a lot of people, it will take some time to, for people to understand that Bitcoin actually incentivizes renewable energy and is actually not the problem, like that it's the other way around, that central banks are basically causing, probably more, CO2 pollution and so forth. But
US military defending the US dollar as the reserve currency is, you can't even compare it. Obviously.
Yeah, exactly. So it will, but it will take some time, since people like to look at their carbon footprints because they have been told to do so, and so for a long time. So I also expect like that, like therefore this FUD is quite, it's quite, it has some validity, especially if if Elon confirms things like this, So I think therefore, it might take some time to recover from this consolidation, but I don't expect it to be a problem. Like Bitcoin has overcome any problem in the past, and it will also overcome this problem. And in the end, number go up, technology will go up, right? So it is. So I expect it to happen, and I would not like to go a lot lower, because that would mean to me a change of maybe human like behavior, like, or that this cycle indeed would be like tremendously different, but as if this was the low, I'm totally fine with it. I think we the longer we go sideways, the stronger support we will build around these areas, and that is actually good for Bitcoin. I remember in early 2016, for example, Vinny Lingham or so was then one of the more famous people, and he was always calling like, let's not go too fast, like let's keep the pace slow, like because he was always afraid, like if we start going too fast up, we come down, and so he was trying everything to like not go up too fast, and I think I mean, it's very healthy if we would go sideways for some time. We will build like a strong bottom for the next bear. I think we have been building kind of a bottom for the next bear around like the 50, 60K area. And, to take the longer we take in this consolidation, maybe also the higher the returns might be for the top, the cycle peak. So
when you talk about, you often refer to the psychology, which, the 4-year cycle in itself is the Wall Street cheat sheet. I mean, have you ever noticed how if this is the halving and this is the beginning of the Wall Street cheat sheet? Even the mid-cycle dip, the euphoric blow off top, the 70% drawdown, the bounce, and then the 80. Have you ever lined them up together and took a look at that?
Yeah, this if you compare this to the 2013 first peak, it really aligns really well, and also to the second peak, this is definitely a very good chart, and I do think this happens. But the thing is, like with Bitcoin, we have this halving event, and it causes exactly this, around every 4 years, So this is that's why it's so amazing. I mean, in a stock market or so, you would also have this kind of behavior, but you couldn't tell the exact length of these events, right? Like it could take a little longer, or it could start at some point, or like, but since Bitcoin is programmed, we basically also program this kind of behavior, every 4 years or so. So that is very interesting. Yeah.
The supply shock sets off the psychological cycle. What's going on over here with the price floor? What are these angles? Let me pull up the tweet first, so I have them both back to back.
Mm-hmm. Yeah. Okay. Yeah, we can talk about this one. So here, this chart I really like to follow because it gives a very good view on, like, to have an idea like how long the consolidation might take. And if you look, so I drew these lines from the start of the previous all-time high and then through the bottom of the dip. And for each cycle, like it kind of have served as kind of like also a floor. In 2017, this again,
is the cycle dip in 2013. You're taking the previous all-time high, and then you're setting this angle until you get to the mid-cycle dip. You can see again, this is the previous all-time high, and then you're lining it up with the mid-cycle bottom of the dip, assuming that this is the bottom of the dip here right now, right? You're taking the previous all-time high, and this is again the angle. That's correct?
Yeah, that's correct. Yeah. And if you look at the slope of this line, which you can see in the chart, like you can see that we are still in between the 2013 and 2017 cycle, which makes sense because the strength of the cycle, we're also in between. So like if I would also get a bit, that's why I think like the bottom, it's again a bit of confirmation that the bottom is in. Because if we were to dip lower again, that would invalidate kind of this analysis, because it would not make sense to go much lower. Like we can still go a little lower because we are at plus 43% per day, like the current slope. But if we go below 39, I would then something else is going on this cycle maybe, like I would have to change my mind maybe about certain things, but for now this seemed to hold quite good. So that's the volatility of the drawdown. So this is the drawdown from the all-time high, and it's nice. Like I colored the consolidation phase basically that we're in now, and so those are the 170 days more or less in 2013, and the 55 days you can see in 2017, and you can again see that that if we look at the support line in 2017, that there is this sudden uprise, that hump that comes there, that maybe it came a bit soon, like if we would have gone a little slower, then it would have been also aligned. It would have aligned more with the line. But so I actually should look at news in those times, like, because I don't know why we went up.
Well, you're not going to believe what happened over here. You're not going to.
Okay.
China banned Bitcoin. You know, it's the same news cycle playing out over and over. But we also had obviously the whole fork wars going on, right? There was a lot of infighting going on, and I believe, I'm not positive about this. This is research that you would have to do, because I'm more interested in price and not so much the news and things like that.
Yeah.
But I believe this is when SegWit was activated, right? And
yeah. Okay. Yeah.
is also,
Yeah. Very nice.
Yeah. So all these coincidences keep lining up, but and maybe that's what caused this to come out, super hot, and then So
I'm just saying, like, these type of events like Elon or whatever, they can just exaggerate price movement for a short amount of time. But you can see we came back. We dropped a little further after that hump as well, again in 2017. And if you look at the 2013, we kind of just we didn't have this huge drawdown there. Like, we just kind of we went up slowly and kept this, like, we went up linearly there. And so in 2017 we had this a bit of a hump there for some reason.
And the possibility is open. The possibility exists. This is actually an anomaly, which, the possibility exists that what happened here was actually, this was the mid-cycle dip. It was a few days later. We were coming out of it as normal. And then Elon tweeted about, let's just call it the FUD energy. And then right off of that, if there was any type of coordinated manipulation about, like, certain Bitcoin holders trying to achieve that caused massive liquidations over an over leveraged market, this could all be an anomaly. And is it possible that the angle that you go off of is actually a little bit steeper, right? And it's actually even more of a medium between these two. It's possible.
I initially drew it that line already with the first dip, and but we broke the trend obviously when Elon tweeted. I had to redraw this line. Yeah. And it's still in between. So, but we're really on the lower side. And so therefore, I do think it's an anomaly, like you say, like Elon caused this price to go down further than it would have otherwise. Although I'm not sure if the first dip would have been the bottom otherwise, because we were due for a drawdown. Because, I mean, if you look at, all trading and speculation leverage that was going on in alts, like it was quite insane actually. So I'm not, it's not that strange that we dropped quite a bit further, although I do think, like, Elon, he has 55 million followers or so on Twitter. Like, anything he says, he can cause, like, some damage to the price, if he says something bad. So we did probably drop further because of it, and we will also probably take longer to recover from it because of it. But I still think, we would have had also a deeper drop otherwise, even if he wouldn't have tweeted anything, because there was just too much leverage and too much reason to, like, there was too much speculation going on, too much risk taking, and so a cleanse was necessary, I think. So this chart, so it only looks at the bullish days of Bitcoin. So only when we're exploring new all-time highs. So it takes out all the drawdowns. And I really liked an analogy that someone gave on Twitter, and he was talking about the amount of sunny days we have in the summer. Like, so if you look at the bull market as a summer, we have between, we only had like 2 or 3 previous summers in this case, but we have on average between 50 and 70 days, of sunny days in the summertime. And so currently in 2021, we have only had 28 days, sunny days. So that seems a bit unlikely, that this is it for the summer. I expect still, twice as much sunny days, that would be more in norm with history. So that's a good way of looking at it, I think. And with making this chart, I was actually astonished by finding this linear pattern, right? Like, so because I got the idea of taking, like, zooming in on these days. So I plotted a chart, and then I looked at it, and I thought, like, I was truly amazed by the linear pattern. I thought, like, wow, you can see so well that we are like in between the 2013 and 2017 cycle, in terms of, pace, and just the linear path there, that like each cycle that we have, like, and therefore like that we can, see this linear line, the trend line, as a price floor also for the 2021 market. Like, so, and I drew these dots in there, and that actually represents the first red dot that's there. Yeah, that represents the 2013, like the number of days after that we had since the blue dot in the 2013 market. So if you go to the blue dot, these blue dots actually represent the consolidation that we are in currently as well. Of course, those have been taken out. So we're looking at the high that we made there. So the blue dot from the current cycle is actually the price of the like the 63, like the top that we have had so far. Once we continue to make a new all-time high, like this line starts moving forward, right? But from this consolidation phase, so in 2013, we had this whole consolidation. It took 170 days or so. That rate basically represents that blue dot, right? So this whole phase, like, because that is taken out, right? So this blue dot, represents these 170 days of consolidation, and then we suddenly make a new all-time high again, and then this yellow line in this case start following this linear path again.
How did you expect the angle of these lines?
They are actually the high of the before we go into consolidating. So if you take the previous chart,
sure.
Yeah. So the top of the 2013, the first peak of the 2013
up here,
that would be the spot, But since you combine that one with like then the end, like if you take out the whole consolidation and you draw a straight line now, a horizontal line from that point till you reach the trend line, so those suddenly that whole part is taken out, right? And then so this blue dot basically represents this whole consolidation phase. So there is in the tweet, that's why I made a GIF about this on Twitter, because it's difficult to explain, like, and I had a small animation that shows clearly what's going on.
So this is very well showing that you're just taking away the whole consolidation period, and that's the angle that by taking that's how you're able to come out to.
So instead of taking the low of the low of the consolidation, since there is no low, because the consolidation has been taken out. So you basically take the high of the consolidation, and that is that blue dot. And I draw a line from the previous all-time high through this, because this kind of represents the mid-cycle, right? So we have this long consolidation in the mid-cycle. And so I draw this line from the previous all-time high till the mid-cycle. And then that linear path actually represents very well all cycles, with an uptick at the end. We always had this, So it will be very interesting to see if we keep on following this trend line, and if we start suddenly get an uptick here, like, it will indicate that we are soon, the sunny days will end.
Yeah, and what's interesting about the previous cycle and the current one is that they are pretty close. They both hugging the angle pretty well. This one's slightly below in the way in, and then above consistently the whole time, right? So being that all previous cycles ended up with us trading above that angle, that's what we would expect. But whether or not how closely we continue hugging this line, or even go below it for a period of time, well, that's all noise.
Exactly. Yeah, I think on average we will continue this line, and we will some days will be a little bit below and some will be above, and we will see how we get, but it looks like we might get an uptick at the end and finish quite a bit above this trend line eventually, at the end of the cycle.
For sure.
So that's why I drew this floor price, because that's very interesting. So the 2013 floor price. It represents the first dot is like would be 142K. The first pink dot in the 2020 line of the price floor.
First pink dot.
The first pink dot, yeah.
Boom. Okay.
So that one, yeah.
Really?
Yeah. So this one, if we would reach that, so that would be in a way, it would be still be conservative, because that would mean we would only have 52 sunny days, right? Like, so that, you know, but that would represent the 142K. And if we would, you know, keep on following this line until like as long as in 2017, yeah, that would be already, I think it was like 390K or so. So, and that is a floor price, right? So if we end up above these price levels, now I do think it's more likely that we'll have something like 60 days. You know, since we're going steeper, it will also be shorter. So yeah, so we will probably end up around there, but that, I think the floor price might not be a good representation of the final price, because it will be above that for sure, you know.
Well, it's kind of like the stock to flow model. You have whatever the price is, but it's expected to overshoot whatever the floor price. What is the floor price around 60 days? Do you know offhand?
I don't know, but since it's 140 and what is it, 390, so it would kind of be halfway, 200 or so, to like a bit higher, I guess, you know, 240 or so.
Yeah.
So, but that would be the floor price. So yeah,
with the expectation.
The thing in this chart is these are cumulative daily, you know, gains basically. So if we have a day that we are rising, you know, instead of like, you know, I think the average of this 2021 line is like 4.5% or so a day. So like if we do more than that, you know, that will make a significant difference in the end, you know. So if we trade above this line for a few days in a row, it will put the floor price, like it will rise the floor, you know, like so. So therefore, I mean, I made a dynamic this graph, so I'll track, you know, as soon as this line starts moving, well, like when we're making new all-time highs, my floor price will like be updated, you know, to more recent, you know, information.
So I mean, I'm truly not the type of person that's even looking for any type of price projections. You know, people are like, but from what you're explaining here and the tone and the cadence of your voice, what I'm getting at is, even with this recent dip that we've seen, even with the greater than expected drawdown of 53% from the previous all-time high, which in hindsight now makes sense because it's less than 2013, it's more than 2017, it's an average of the two. You're still expecting, if everything continues to play out according to this data and models we've been looking at, the price is, you know, the you know, expected to overshoot. We're expecting, you know, somewhere around 60, let's call it sunny days, right? We're expecting price to overshoot that, putting us above, you know, $350,000. You know, if, you know, I don't want to put words in your mouth, and I'm not trying to, but that seems to me making the observation of a pretty, I don't want to say conservative,
well,
but you know,
it's not really that I'm making this prediction myself. You know, I'm just showing a graph here, and I'm just showing historic data, and if history keeps rhyming, we will reach those kind of prices, right? Like based off this graph, but I cannot predict the future, obviously, and I'm not really. Well, I'm trying to, obviously, a little, but yeah, only if history rhymes, right? Like, so it could still be that this cycle, you know, that institutional investment and whatever that's coming, that it might change the cycle pattern a little, you know, and that things go differently. I mean, Dan Held, for example, came with like the super cycle theory as well, and you know that you know dynamics might change if that would be true. But I, again, also in this chart, that's another interesting thing. Like if we would continue the price past 2017 floor price, that would also kind of like either indicate lengthening cycles or
Super cycle.
Well, it would for sure indicate lengthening cycles, but it would also indicate maybe like super cycle territory. Like so. So, for example, where you're at now, like if we were to get there, then like something is off as well, right? Like because like why would we take so long? Like so that would, like, if we have significantly more sunny days than previous summers. Why, like that would also be a little strange, right? Like then maybe also the dynamic has changed from the cycles.
Yeah, there are three ways a super cycle could take place. It could take place because the length of the cycle is actually lengthening. It could take place because to the upside, price breaks out to such a degree it would have to outperform at least the 2013, which is roughly above $800,000. Then you can call it, or the bear market low could be less than 85%, or technically speaking, 85%. But I think when we saw people, there was a lot of chatter about, well, this cycle is different. The institutions are here. The volatility to the downside is capped. Well, we just saw a 53% drawdown and, like this. So I think that, regardless of institutions being here or not, we're still seeing, the market dynamics play out as they have in the past.
Yeah, exactly.
Ruud, thank you for taking the time to get together here and for us to get this really, I have to tell you, I have the utmost respect and admiration for what you're doing, for the unique, work that you're putting out here to the community and putting it out so freely so that everyone gets to absorb it. And then go, it's that principle of iron sharpens iron, right? You're here to just add to that hive mind, that Bitcoin hive mind, and help everyone improve. I truly hope that once people now had the opportunity to hear you speak and explain things further, we would love to see you doing the rounds across all the podcasts. We'd love to see you, having conversations with people that are able to help move us all forward. So really grateful for you. And of course, everyone now knows that Ruud on Twitter is the only link you're going to find in the description below. Make sure that you're following him and his work.
Well, thanks so much, Jordan, for the kind words. I love the open source mentality in Bitcoin, and therefore I'm doing this, man. I'm not in it for only making money. I like Bitcoin. We have a higher goal, right? Like this is a new. We're building a new world basically. So it's very exciting, and of course I want to share as much as possible with the talented people within the Bitcoin community, because I also want to be corrected, so if I put it out in the open, I already got like some quite nice insights because of sharing these charts. So it helps me further. And I love that about things that are open source, you get so much talent, and, together we can, improve things faster than doing everything by ourselves only. So, yeah, no, I think it's very cool that you're doing these same things, right? Like the more, if we're many that find, similar, like if we're doing basically redundant, like research, it makes sense, right? What we're doing then, right? Like it's a kind of confirmation that we're on track, right? Like otherwise, we wouldn't both see this,
including having that openness. I just want to know what's right. I sense that in you. If all your models are wrong, well, you don't care. You just want to know they're wrong, and you want to find out what's right going forward.
Exactly. Yeah. We'll keep on. We have to work with the data we have, right? I'm just using historic data to, make a projection into the future. But I could be wrong, and things might, change this time around, and we'll see. But the more new information we have, the better we can, can see where we go from there. So, and I think that's what you're doing as well, right? That I like that. You go from the previous all-time high to the dip, and so you're taking this new data into account, right? And you see what makes the most sense now. And I think I think that's a logical way to look at things, and I like that approach.
And if a new variable comes into the market, we realize, hey, listen, that's the thing. We just want to adapt going forward to have the best awareness we can to keep going, to get to the goal we want to get to. Yeah. So, if the 4-year cycle breaks, let's adapt and find out the best way to accumulate as much Bitcoin as possible. That's the way I see it, at least.
Yeah. Yeah. Good. Yeah. I see it too, like that.
We've all been privy to what you've been sharing, through Twitter, getting the opportunity to hear you speak and articulate not only your work, but what's going. It's a privilege for the whole community, the Bitcoin community. It's really, thank you for doing that. Well,
thank you. I'm glad that I can actually finally, add something to the Bitcoin community. And it's I love the Bitcoin community. So it's nice. I could talk about Bitcoin every day.